The markets are never obvious. That includes Bitcoin, stock markets, real estate. They're designed to fool most of the people most of the time. And this is a quote from Jesse Livermore, a fantastic trader who lived over 100 years ago and made many, many millions in the market. So today's video, I want to have a look at what I think most are getting fooled about. A red September, or in this case, maybe a collapse in September. We've heard calls for Bitcoin to come down to 19,500 to take out the low, 15,500. And of course, we still have those big calls out there from some very well-known traders and professional investors and media saying that we need to get back to $14,000, $13,000, $12,000 Bitcoin. But as I say at the beginning, I think most are going to get fooled by this. Although Bitcoin could be a red September, the data does not look like it is going to be extremely severe. So let's take a look at that in today's video. Looking forward 6 months for Bitcoin, 12 months for Bitcoin, and where I think most are going to get it wrong because they're waiting for something big to happen in the markets. You know where you're at? You're at the macro cycle analysis home, your home of where we study the past to forecast the future. We're covering crypto, Bitcoin, real estate cycles across the globe, and of course the stock markets across the globe. How do we do all this? Make sure you hit the subscribe button and of course like the content so you can find out how we've been doing this for years upon years with all of the data there in these videos. All right, guys, let's take a look at the data that we got for today's video after I can make a quick mention. Link in the top of the video description. I'll come back and reference these a little later on. Okay, so let's start with the stock markets, but I've got a ton to get through for Bitcoin. Just want to give you a quick update for the S&P 500 and where we currently sit for these returns for September. Okay, so the main thing here, there's a lot of words, a lot of numbers. Let's break it down really simply. And we're just looking at the top line here, which is basically in the rectangular box. The reason why we're only looking at that is because this is the criteria that the stock market has met for 2023. So it has met year to date through to the end of August. We've got 8 full months with a return of greater than 15%. This is what we currently have, a return of greater than 50%. We've seen 17% for 2023, and this is typically looking at closing prices, open to close prices. Now, there's many other ways to record it, but for this, I think it's just looking at the closing prices. Either way, 2023 has been a mega year, while the majority have been expecting big downside collapses and they're still calling for it. Now, you've got the receipts on the channel why we believed this was the low coming into the market in mid to late 2022. And then, of course, the mega March dump, which doesn't look that big on the chart, but at the time the fear was extreme. And most were calling for another major collapse, but didn't happen and the market skyrocketed from that point. So let's get back to the data itself. And this has happened 7 times and we're into our 8th time over the last 70 odd years, going back to the 1950s. So since 1950, year to date through to the end of August, they had 20%, 20%, 16, 26, 22. You get the deal. Average was about a 20% increase. We're there at around 17%. August had to have a negative month. August was negative at negative 2%. But the negative month looks actually quite strong as we read the chart from a monthly perspective. Nice strong drop onto our 50% level with a high close. A high close means that there was a lot of buying activity happening at those lows. It doesn't mean that we're going to skyrocket the next month, because sometimes we just need a bit of time to consolidate and digest the moves that have happened. 2 very strong months up. You had 7%, and then 3%, and then a pullback, and basically a bounce back and only down 2% from the previous month's close. So it doesn't mean we're going to skyrocket, but maybe we need a couple more months here, as we've pointed out, for Q3 and then into early Q4, where we just start to churn around until we finally get that push on later in the year. Now, the thing that could fool most for the next part, because a lot of people are expecting a Q4 pump, maybe it comes earlier in Q4, whereas most are expecting it at the end, the old Christmas rally or post the Halloween rally as well. So it might come earlier than expected because, as we know, as Jesse Livermore's told us, stock market is never obvious. Things rhyme, they don't have to repeat exactly. So let's go back to the data, and basically what September has shown is that 86% of the time once the year to date, so once these signals, these targets have been met, year to date through to the end of August was greater than 15%. And in this case, August also being a negative month, so there's a lot of criteria to meet here. September has been an up month. Now, it's not a huge up month. You can see here the average is only 2.9%, so that would leave the S&P 500 from August at 2.9 or 2.5%, somewhere around the previous tops here. So if we have a look at that again, 2.9, it's basically back to those highs there at around 4,600 points. So it might push to a new fresh high, and maybe we get a little bit of a pullback again and the market continues on. So what else does that have there? For September to the year end, it has been positive 100% of the time. Is this always going to be the case forever going forward? Probably not. But for now, we've got nearly 70 years of data here showing that every time we've had a strong year and then a negative August, September has been positive, and then to the end of the year has also been relatively strong as well. I suspect this is going to continue for 2023. It might not work out exactly as people are expecting, but nonetheless, we're still looking at a positive year here. So that could spill over into Bitcoin, and there might not be as much weakness throughout BTC either. So onto Bitcoin and the data. I've got a lot of data to get through here, and some of the stuff looks absolutely fantastic. We've got 6-month data, 12-month data. If you want to figure out when to be buying Bitcoin and the best times, that's what I want to show you coming up right now. Bitcoin, September, known as the red month. Put this out on the post. Is this going to be a red or a green? Currently, we're in a slight green. Maybe by the time this comes out, Bitcoin's already retraced the gain that it's had over the last 24 hours. Nonetheless, we still have about 3 weeks to go in the month of September. I'll leave a comment at the top of the video description. I'll pin it there. What do you think is going to happen with September? We're going to see a red month or a green month? What most typically look at is, I'd say, rudimentary data like this. Data is really important to have a look at, but it comes down to how you interpret the data. So the more you understand the data and the more you can actually make it actionable for your own investment plans or your trading plans, then it's going to become far, far more valuable for you. But just looking at September and saying, oh, some of the time, 1, 2, 3, 4, 5, 6, 7, 8 times it's red, and then in the green, you've got 1, 2, 3 times in the green. That means more often than not, it's going to be red. It doesn't take into account the cycles and where we're at. And a lot of look at this old pre-halving for BTC, but we want to look at it in terms of a 4-year cycle looking at bottoms to bottoms. Now, there is some confusion there when people look at 4-year cycles. They expect it to be the halving or halving, but I typically don't look at it like that because I don't think the halving is going to work out forever the way most think. But we can continue to measure lows to lows, macro lows to lows and macro lows to highs in the market, looking at timing as that's something that we'll look at as well. So I think when we just pull this apart and just say most were red, some were green, therefore maybe we're going to get a red, or then average this out, probably not the best way to look at the market moving forward. There's nothing completely wrong with it, but I think you can do a lot more and get a more accurate reading rather than just sort of take this at face value. So BTC, this is what it looks like when we pull that apart. You just basically put the 12 months on, there are the lines. But if we want to break it down a little bit further, then we can put it into bull markets and bear markets. The bull markets obviously being these bigger periods here, and the bear markets being the smaller periods. Bear market looking from a high to a low, and then the bull market, the low to the high, which is typically so far has been approximately 3 years. Now, if we want to look at the 4-year cycle, that's looking at the low to the low, approximately 4 years. Low to low, approximately 4 years. And we only have a few of those to look at so far. So we want to continue to get more and more data into this because maybe things will change in the future, and I suspect that's what a lot are hoping for at this point, to come down in the market, and therefore this bear market would then extend further beyond where it currently is at November 2022. But for now, we're working with what we have, and this is what we have. The 4-year cycle has been pretty good to us, talking about low to low, not the old halving cycle. So is September a good month to be buying, even though most are fearful and they're expecting lower prices? As I've talked about, breaking down from the 19.5K or 15.5K, and we still have people calling for 13 and 14. I think it's mental. I don't think those lower teen prices are going to happen. But of course, everyone has their own opinion, which is why the market does what it does. We don't all agree, and therefore the price does what it needs to do. Now, I put this post up just today, actually, just a couple of hours ago. I wanted to see how long would investors, Bitcoin investors, you guys, how long are you planning to hold Bitcoin if you bought it in 2023? So that I could get some data together for you and present, well, is now a good time to be buying, rather than going to sleep in September. There's also been the old adage of, if September is red, then let's forget about it and come back to the market later. I think that is not a good idea based on what we have found here in the data. And we don't really need to worry about what's happening in under 3 months for this particular lesson here. 3 to 6 months, not that many either. 6 to 12 months could be something interesting to look at. Maybe 1 in 10 people are looking at selling within the next 6 to 12 months. And then 12 months plus, the majority of people are looking to hold Bitcoin for that. So if we're adding all this together and looking to hold Bitcoin for longer than 12 months, and September could be red or flat or slightly green, and we see all the fear in the market, and the prices have been down off the highs, we're getting close to those swing bottoms, so there's a lot coming together for good pricing here. Maybe it hits 24 or 23, so like a good entry. Then let's have a look at the data. If we're looking at 6 months from now, so the 1st of September, just so we can get a clear range. We're 1 week in now, 8th of September, 1st of September to the 1st of March. And then 1st of September to the following year, 1st of September again. And I've gone through, we've got all of the percentages here for the 12 months. We've also got them all for the 6 months. So let's start with the 6 months. And there are 13 occasions that we've seen so far in Bitcoin. So about 13 years of history, 13 and a half years of history here. And in terms of green, going forward for 6 months in BTC. This is the same sort of thing that we typically look at when it comes to the S&P 500. We've got a lot of that data, but there doesn't seem to be much of this data for BTC. So I've started collating this, and pretty simple to do, but just takes time. So in terms of the green, positive 6 months going forward from the 1st of September, 6 months later, 8 occasions were positive. So if you're just looking to hold Bitcoin for 6 months from the 1st, 8 out of 13 times it's been positive. 5 out of 13 times it's been negative, and 3 of those times have been quite severe. Can you avoid those severe times? I think yes, because we've seen the bear and seen the bear, and those extreme downsides of 46 odd percent have never been twice in a row. So it's unlikely that we will see that this time around. Going 2023 September to 2024 March, or March 2024, it's probably unlikely we're going to see a big down period of around 46%. Not impossible, but it's probably very, very unlikely. So then that starts to reduce your risk in the market, which then allows you to potentially deploy more capital at these times when the market is down, potentially, in Bitcoin's case, potentially putting in a macro higher low. This is how you start to make huge money in your investing. And you can apply this to all markets, stock markets, real estate, anything with a chart that you can then measure the data from. This is how you get in at those lower points with lower risk because of what we've seen in the past. Remember, nothing is going to be 100%, but if you've got some stops in place, then you can protect your capital. Rather than deploying more capital at the tops, which seems unlikely, if you've got 3 periods of green, it's more likely you're about to see a red period. So don't deploy more capital at the top, deploy more capital at the lows. Okay, so in these times where we had less than a 40%, we had 11% in 2019, 2020, which is similar to where we currently are. And then also 2021 to 2022, which was actually the bull top to the start of the bear, was only a -3. We're not really in that period right now where we went from here to here. So that's September 2021 to March 2022. We saw the peak of the market come in, a dump, lower top form, which is very, very weak, and then the market collapsed. But nonetheless, you only lost about 3% there if you got in late at the top as well, and you held for 6 months. So let's have a look at the data again. That gives us a 62% win rate. Not anything crash hot if you take all of it into account. But if you take out the bearish years, those two right there, then you start to look a little bit more positive there. You've got 3 losses, still 8 wins, only 11 in total. And so you increase the probability of getting a positive 6-month return from this point in the market. Now let's take a look at what 12 months looks. And I think this is where it gets super, super exciting. Before we have a look, like and subscribe if you haven't already. I know about 3 out of 10 of you are still not subscribed. Go do that. Let's see if we can smash this channel up to 300,000. And of course, Twitter and the rest of it are all down below if you want to follow along with some more of these tweets on the data. You ready? Let's unhide it. This 12 months forward looks absolutely incredible. 85% hit rate. And if you don't get screwed in the bear markets, you're at 100% hit rate. 12 months from September 1st to the next September, so 2023 into 2024, 100% of the time would be a positive result. I don't want to go too hard onto that because maybe it's a negative 1%. Maybe we get a little pump up over the next 6 months and we fade all out again over the following 6 months and it's -1. Either way, we're not there yet. I'm just looking at the current data that we have. It is 85%, including those significant bear markets that started from those bull market tops. Avoid the bear markets which happened last year. It doesn't look like another one happens a year after the last. You know, when we get one of those, we typically see a good positive 12 months, another positive 12 months, and this sort of carries on until the next bear market. Now, you're probably wondering, well, there was a bear market in here in 2018 into 2019. So what does that actually look like? So 2018 into 2019 was positive, and we saw in 2022 to 2023 it was actually positive as well of about 29%. So it's still a win. It's not something that I guess we stick around in crypto and Bitcoin for. We expect bigger returns than 20 or 30%. But nonetheless, it's been a pretty good bearish period for BTC. Is it going to be the same moving forward? That's obviously anyone's guess. And all we can do is work off the data that we have here. And it looks like we're probably in the midst of potentially putting in another positive 12-month return from this point. Just how big is, of course, the thing that we're trying to do here. No one has the answer to that. Only the market will tell us that in 12 months' time. There are no guarantees in the market, just probabilities. And if we can sway them on our side, then that gives us the ability to either scale up our investments at a point that we think is lower risk based on the data, or we scale back. Potentially it's at a top. You make the choice there. I'm just presenting you with the data that I've collated over the last 13.5 years for BTC, and so far it's looking pretty positive. That's looking forward 12 months. Things are looking pretty good, but in the short term, there is potentially still some more downside to come. I posted this on Twitter yesterday looking at the Gann swing indicator. As it had turned down, we were still on a daily downtrend there, but at the moment we just saw in 24 hours, the market rise up and now fallen back into this zone. So this could be that time that we have tested the supply to the upside. It's failed, and we're creeping lower again. We're gonna have to wait to see how this pans out as the US opens in the next few hours. But the percentage to the downside to break the monthly swing bottom, which is at 24,750, is now at about 3.8% away. So this could be that opportunity to get in at the lowest price possible if you are prepared for it, and you are now armed with that information going forward 6 and 12 months so that you don't get fooled out of your positions as the market continues to churn and chop over the next 6 to 12 months. The data suggests that it is likely we'll see a positive 12 months for BTC. We'll come back to it in 12 months' time so we can fill in the gaps here and see whether this data has actually proved itself time and time again. So don't go anywhere. Hit the like and subscribe. Stay tuned. Lots still coming up, and some ETH updates. 74% of you, 3 out of 4 said you wanted to see some Ethereum updates. So stick around on the channel. I've got a few of those coming up, especially some significant timeframes here where it seems like, based on the data, that ETH may not get that collapse that most are hoping for to take out cycle lows. That is at around 5 million Satoshis, ETH versus BTC. It is starting to flatline here. Let's look at this in the next videos. We've gone on long enough here, so make sure you are subscribed to the channel, like all that sort of good stuff. Link in the top of the video description is for our TIA free crypto and economic report, trading guides, discounts. Subscribe to that. Heaps coming out there. I'll see you at the next video, guys. Till then, peace out.